accounting. So we will see that the definition of accounting and products of accounting. So let's see the definition. Accounting is a business language. It uses bookkeepers' data and translate into a meaningful information for different stakeholders. Here, the important thing is to remember that what is the nature of accounting? It's just a language of business which tells or to someone's. And what are the someone's? These are the stakeholders. So here, what is meant by stakeholders? Stakeholder, all the individuals which are directly or indirectly related to your business. For example, owner of the business, who owns the business, he's a main stakeholder. The workers who, for example, we are here working in Chandbagh school and we are employees. So all the employees of an organization is the stakeholder are the stakeholders. The customers of the business is the stakeholders, the suppliers who provides different services and goods to the organization, and the banks, the government, tax department, the society. All these individuals, all these groups are known as stakeholder. So the product of accounting for these stakeholders could be so many, but among two very important products, number one is your income statement. And what is income statement and what it shows? It shows profit or loss made by the organization in a particular time period. For example, in a period of 12 months, how much profit it has earned. And which statement tells you about this information? The income statement. Shortly, it is known as I.S, income statement. Next is your financial position, which is very important and which shows the worth of the business at a particular time period, at a particular date. For example, how much assets it has with it, and what are the values of liabilities, how much loan they have taken from banks, and what are the value of credit from which they have bought credit purchases. And lastly but not the least, that is the portion, the right of the owner on the business. For example, it is known as the equity. So these three aspects are shown in the statement of financial position, which shows the worth of the business. So here are some important points which should be remembered. And number one is the definition, regarding definition, that accounting is known as the language of business. Number two, accounting relates on heavily on having accurate bookkeeping record. So if bookkeeping record is not accurate, accounting will not produce true and accurate results. Bookkeeping is performed daily rather than periodically. Bookkeeping is based on the double entry system of recording. Accounting is performed periodically rather than daily. And here two things which are basically contrast with each other, that bookkeeping is performed daily, whereas accounting is performed after a particular time period, and it is periodically. For example, after 1 year, or you may make accounting statement financial or your income statement periodically, rather shorter than 12 months, means 6 months or a quarter, and whatever you wish you can do it. So normally they are produced annually. And accounting, not the bookkeeping, involves the preparation of financial statements. So it's a prime responsibility of accounting, not your bookkeeping, to prepare income statements. So boys, that's all about your lesson 2, and just rewind this video and watch it again and again, so that you have clear idea of accounting and what are the products of accounting. So see you in the next lesson, and till then, thank you very much. Allah Hafiz.